Good morning, ladies and gentlemen. This is Manjeet Singh from Manjeet Singh CPA PC at Lomans Plaza in Falls Church, Virginia. Last 2 weeks, I have talked about the slight changes in the tax law that have occurred since September 2009. And today, I would like to talk about what you can do to save on taxes or to avoid getting audited specifically by the Internal Revenue Service. This is more important from small business perspective. The last email that we received as practitioners is that the Internal Revenue Service is going to be looking at about 6,500 tax returns regarding the employment taxes. But there is nothing to stop them from going and fishing around in other areas as well. For example, what can you do to save yourself or avoid the audit? First thing that you should do is, for small businesses, I have recommended the IT individuals to maintain an Excel spreadsheet to bucket each expenses together. More and more people are using small accounting softwares. Most popular is the QuickBooks software. They have different versions. QuickBooks software allows you to maintain the profit and loss statement, the balance sheet, and also prepares the cash flow statement, which are the three items you usually need when you apply for a bank loan. What other things can you do? When you go with your QuickBooks data file to your accountant, please provide him with the full information to put it on the tax return. If the accountant is making certain journal entries, please get those journal entries and input it in your database so that when you're building up on it the next year, you are consistent with what the tax returns say. A lot of accountants find shortcuts and usually do not provide the journal entries. Substantiate the deductions. For example, in QuickBooks, you can maintain the accounting database using accrual basis of accounting. In other words, you received a bill, you have put it in the system. In the system means you have an expense and the amount is owed to somebody. However, when you write the check, what the software is going to do is take it out as an expense, take it out from your owed money and reduce your cash. It is not going to record the expense over again. Some of the individuals do double entries and it creates a nightmare for the accountant to solve it. But if you do not have inventory, you can prepare your tax return on cash basis. QuickBooks has a facility to click the button and you can see what would be your profit and loss on cash basis. In other words, if you owed your professional $10,000 but you didn't pay him, it will not show up in your expense. So once you have all this documentation and the Uncle Sam comes in and says, we want to review your books, you're on a very solid ground and nothing to fear if you can substantiate everything that is in your QuickBooks. I think I'm running out of time on this one, and next week I'll be back with some additional information. Till then, this is Manjeet. Namaste.